And there we have it, the ultimate blueprint of everything you should know so far in combination. So you have a very good feeling about overall how the market works, what cycle variation we have, how we utilize them, and now we dig into how we actually can trade them with the entry approaches we gave you, right? So it's more than just a dream anymore. It's the ultimate blueprint. So this will be one of the most important videos of week 4, because that is where you have to really put in the work and get used to the entry approaches we have in combination with everything we had before and all the different cycle variations to get prepared and be ready for when a cycle variation appears and how you can utilize your knowledge so far and have an advantage over the markets and know exactly what entry approach to expect also. So let's dig into the blueprint. Okay, so it will be a little bit more theory video, but very, very important video. So take a lot of notes and maybe even draw this stuff yourself for even better understanding. Okay, so as always, we start with the H1 time frame, right? The 1 hour time frame. And I just gave a basic example here. So let's say we had something like, okay, 1, 2, 3 triple bottoms right here. And then we had this huge tube, medium, or maybe even major inducement, right? We already had, okay, irrelevant break of structure right in here, right? Perfect. And then what our market pulls back, and we are right here in the 1 hour, and now we break this down into the M5 as always, right? So this is the M5, but the 1 hour, obviously the box is just like this, right? 8 hours, so 8 candles. More, no, it's not more like that, right? So again, 1 hour chart, and we're currently here, and then we break this day down on the M5. So if you see this variation on the 1 hour and Asia range is right here, and then we break it down to the M5, there's 4 potential variations we could expect, right? Because we know this is a minor, medium, or even major inducement, right? Based on the, first of all, H1 and the triple bottom in here, maybe even took out something to the left, even like something like this, maybe, right? Then it's definitely major, right? So, but just let's say this picture, and we just say, okay, for argument's sake, this is just a medium one. It's completely fine as well. But we know we want to trade away from that, but our perfect Mona Lisa point of interest is in here. Okay, so M5 opens up in here, or technically is done already with Asia range, Asia buildup. So technically it would be like something like this, right, on a 1 hour. Okay, so perfect. Then we can expect 4 different cycle variations. The first one, of course, is our starter kit. And now you should already understand in your head how the starter kit could look like. It either could look like, again, inducement high here, maybe into mitigation, right, in London, then goes low, New York in here, and then something like this. That would be our starter kit, but also can be the other way around, right? So it can be something like this, right? And then something like this. Okay, that's also a possibility. So we have the starter kit variation. We also could have an Asia whipsaw, right? So Asia whipsaw would be more like either like this, right? Would be possibility as well, right? Or again, the other way around. If we have it like this, right? But that's more like unlikely. As you can see, that would be very fast price movement, right? And then technically, is that a possibility? No, right? So we know, okay, if the Asia whipsaw appears, the inducement low would make not too much sense, because that would mean it gets whipped again, and that's very unlikely, is it? So Asia whipsaw, again, yes, we have like 2 cycle variations, like a upside and to the downside, right? But first of all, the inducement has to happen to the upside first, then we can have a whip of Asia, and then we can take it out again, but into this mitigation set. That makes perfect sense, but not if we have it like downside, then the whip, and then again, technically, because Asia whip, so you aim lower than here, that technically does make a good sense, does it? Right, so that's more unlikely. So Asia whip, so only in one direction in here. Okay, retail heaven, obvious one, right? Same thing. If the inducement happens low, we don't expect a retail heaven, because that's not a really outcome for the day, is it? Right, so that would be the retail heaven to the low side, very unlikely. Right, but if it induces to the high side, then it could be a possibility, because yeah, maybe this major or medium inducement already grabbed enough liquidity. They don't need to come back to efficiently pull or deliver price action, don't need to fill imbalances, whatever, they're just out of it. So to the high side, an Asia whipsaw, a retail heaven we can expect, but to the downside, same thing as Asia whipsaw, very unlikely, right? Because why would it just sit here and then wait for the next day? Could be, again, very slight possibility, but very unlikely. Okay. Then London knockout. That's obviously the ideal scenario if we have market condition like this with the medium major inducement, right? If we have London in here, boom, into mitigation, and then just out of it for the whole day. That's obviously the better, the Mona Lisa scenario, as we're trading the mitigation of this major medium inducement in here, London open in here, grabbed enough liquidity internally or intraday wise, and then just is out of it. Okay, that's obviously the 4 cycle versions we have. So we can have both scenarios for starter kit. We have one variation for the Asia whipsaw, we have one variation for retail heaven, and of course one variation for London knockout, because again, same thing. If it's to the upside, it will not really end like this. Okay, and then the day is just over here. That's very unlikely as well, right? Same thing as retail heaven. Okay, so how does that even look like? Okay, so now we dig into more breakdowns and see the bigger picture of the M5. Okay, so let's say we had the scenarios in here as we covered, right? So H1 in here, triple bottom, perfect. And now we induce high, right? Perfect, even nicer than having the mitigation in here, right? So technically that's our perfect ideal scenario. If again, we want to go low a little bit first, again, we want to make sure that people are getting stopped out. Sometimes, again, don't get me wrong, sometimes you can get an mitigation here as well and then go lower. That's also very possible. But the Mona Lisa scenario would be smart money trap in here, induced high of this highs, and then into the mitigation down here, and then obviously it gives a reversal or in New York trap. That's the Mona Lisa starter kit variation. But again, sometimes you can have a valid mitigation here. The M5 obviously will give you the proper understanding for that if you expect an SMT or the inducement. Okay, so let's say we have Asia range in here. We have like a really nice build up, right? And then into an inducement, and the mitigation zone would be something like in here, right? So that's the extreme mitigation right here. Again, then potentially don't expect an inducement of this highs, because here's your build up. You're already into vector candle stages, right? And then maybe this baby thing in here is the, for fuck's sake, into the valid mitigation, perfect, and then down, right? Then obviously this mitigation would hold. Other way around, if it's, again, let's say we have this point of interest in here, we have Asia range in here, right? And then we're just having something like this, build-ups, we're still in the channel, right? And then again, gives a double bottom in here, a double top in here, then of course you expect an inducement and then trade lower, right? So that's all the cycle versions you have to expect. Again, if you have an inducement low, force per build up into inducement, into medium one, and then trading away from it. So the M5 can give you a very good understanding of this is an inducement or a mitigation to the left. Okay, so in this scenario, we had the perfect ideal Mona Lisa scenario with the SMT first, right? Giving a false reaction and then inducing this medium, right? Perfect. So let's see what we had on M5 though, right? First of all, again, Asia. Then again, if we have like a build up to the high side, right? Okay. But then the build up getting induced low into mitigation could be also Asia midline. We had never had an inducement high or low out of Asia range. Perfect. So that could be, again, a potential trade. We will dig into it. That's the fast and fluctuous trade, right? One of my favorite trades there is, right? Because again, you're not having an inducement to the high or low side. You're still in Asia range, but you're having your build-up inducement into a mitigation, maybe also Asia midline, right? Maybe LETs, maybe EDMs, right? And then you're trading into the inducement, perfect stuff. And then you expect, obviously, after the inducement, the reversal, depending on where you are in here, right? But that's definitely tradable in Frankfurt or even early London. Could be also potential, right? But that would be technically in here, and then you expect something like this, right? But that would be in here in the 1 hour, perfectly fine. Then after, again, we had the A inducement minor one, right? So maybe this one is even this one in here, right? That gives the false reaction of the mitigation zone, right? You're still in the build-up zone. Perfect. So what do we expect? An inducement high side. That's what I drew earlier in here, right? So we're still in the build-up zone. You know, not had the inducement yet, other than the minor one, right? The minor one gives just a fake reaction here. Still is in the build-up stage, right? Now finally, vector candles into London Open. Perfect, right? And then we could technically look for here into a potential mitigation, because this cycle on the M5 is completed, right? Then the next ideal scenario is the extreme mitigation of here. So first of all, we have this extreme mitigation to the left, right? To the left. Then we had the mitigation of the inducement in here. Then after break of structure, we can have our LET or EDM trades. And later on, we can have our only EDM trades, and then we aim for Asia low, seeing the build up, right? Seeing the false double bottom in here, false reaction, New York trap time, boom, into what? Into now this Mona Lisa point of interest of the H1. And if that takes into the, right, we could have potentially 2 or multiple entry opportunities. Again, if you refine this on the M5, finding our, let's say we have maybe something like this, same scenarios, imbalances left between here and here. That's our M5 point of interest in here, right? So potentially we can refine it, right? Or we have something like this, but then also something like this, right? So we have our extreme mitigation or this one, right? And then obviously we see when the cycle is completed. Same thing. Again, the cycle on M5 will always help you to identify the proper point of interest. If you see the buildup is getting induced right now to low side, and you're in this point of interest right here, chances are very high that this will gonna hold and will not go into this one. Okay, so that's why the cycle always comes first. Then you look to your left for potential mitigation areas, but you still know, okay, this is my potential mitigation area anyways. You just want to refine it. If you're not too good with refining POIs yet, completely fine. Just stay away from the extreme and wait for what? Internal break of structures into mitigation, right? Maybe a LET next thing, maybe a LET also, or maybe EDM, or the next build-up inducement into mitigation also induce this channel they're building up in here. So that's also a very good opportunity, and you're trading away from that mitigation of this medium inducement or even major one. You want to trade away from that, or that's technically Mona Lisa entries in here or in here, or technically in here. And then obviously you expect price action to go higher away from that points in here. Okay, so how does that look like? If we break it down to entry approaches, exactly how we said, right? We can trade definitely this extreme, right? Again, if you're not sure if this should be a mitigation in here on smart money trap, just stay out of it for the extreme mitigation and wait for M5 confirmations, right? Because again, if you're not sure if the buildup is induced yet on the M5, not a problem. Break of structure, let, timing, EDMs, all gives you entry opportunities if this holds as a mitigation, or if it wasn't ready yet and you're still in the build-up stage, right? That keeps you away from getting in. You wait for the inducement. There you go. Then you know this can be your mitigation on the extreme as well. Okay, but always use the M5 for seeing if the cycle is ready, completed or not. Okay, so but if you had that perfect reaction, SMT into inducement, medium one into mitigation in here, we definitely can fire approach number one with the extreme limit order. Okay, then the next thing we look for is the approach number two. So aggressive one, if we didn't have a break of structure, again, this would be the real break of structure in here. We never had that, again, price just giving a pullback in here, but that's the aggressive one with the mitigation of the extreme. Okay, but definitely these will happen a lot because not all the time you will get a clean break of structure. If you're looking at the M1, for sure, different scenario. Again, this one right here can look on the M1 something like this, right? This is your extreme inducement, and then you had something like this, break of structure into let, into mitigation, boom, and then you go on, right? So again, that's how you use multiple time frames, but as this is just the M5, sometimes you don't have a break of structure. That's why you look for the M1, and chances are that you have a break of structure in here, maybe even a let, all that stuff. Again, if it's a let, approach number three. On this scenario, this is the M5. Again, break of structure would be right here. That's your mitigation area. That would be your approach number three, confirmed also with a let, for example, and confirmed also with a relevant break of structure. This also can be a break, a let in here, of course, right? Then this is just your break of structure approach, even safer, right? The last approach we had, you probably guessed it, EDM trades after, usually happens in the middle of the range after the extreme. Again, this also can be a EDM. Then technically this one would be only interesting but not ideal, right? Again, the best scenario would be extreme approach, let EDM in here, and then you have the whole movement downside. Sometimes, again, the EDM comes quite late. Completely fine. You just have to be aware. If you have the inducement already to the low side, and then, for example, like this point and this point gives an EDM in here, be very careful about that because you're trading into the inducement then. And again, that's not EDM-like anymore. If you had the liquidity grab to the downside into mitigation stage in here, the EDMs usually get disqualified or not valid anymore if you had an inducement already. So be aware, EDMs, they usually happen a little bit late. Completely valid if you don't have the inducement yet. If you had it, reconsider you taking this trade and rather look for the other direction away from the inducement. Okay, so extreme, maybe aggressive one without break of structure but being a let, then more confirmed one with the break of structure, maybe also let, right? And then the last one with approach number 4, EDMs technically on the M5, right? This time on an M5, or again, you can look for EDMs in between in the M1 as well, completely valid. Perfect, right? So that's technically all the approaches we have. And then it goes all over again, right? So then again, if you clean the picture a little bit, because technically we're only here, 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 and here, right? So now obviously we are done with the cycle. The build-up getting already induced minor Asia low. And then finally, boom, vector candle, New York trap into what? Into this 1 hour point of interest. So technically here done. Technically even we could have traded this push before. So 1, 2, then 3, 4. That's probably the EDM in here, right? So 5, and then New York trap time, New York cup trade, perfect. Same thing all over again. Build up, like of this channel, getting induced with vector candle into mitigation, into timing, refine the POY, 100% possible that you have an approach 1 as well, right? So refine it on the H1, A5, and then see when the buildup is done into the inducement vector candles. Timing confirms the move. Approach number 1, extreme limit order, definitely valid. Next one, same thing as always. Approach number 2, extreme mitigation. Again, in this example, even nicer. Technically had an approach 3 already, right? After relevant breakout structure in here, right? This is the push that led to the vector candles. Breakout structure into mitigation, also maybe being an let, even 10 times nicer. That would be a 10 out of 10 trade if this would be the case, because you're still in this Mona Lisa point of interest, right? In here of the H1 medium or major inducement, you want to trade away from that. That would be a Mona Lisa scenario. And last but not least, we had, of course, even another chance with the EDM in here, or again, if you see the bigger cycle in here, like a channel getting induced into mitigation, right? Here is your fake breakout structure or your structural inducement into mitigation, but overall this just induced the bigger picture channel. They're creating in here inducement low of the channel to go what? Higher away from the medium major inducement, and then you're expecting obviously the next day to shoot out of there. Okay, then if we had the same scenarios again, H1, but again now this time we're getting an Asia whipsaw. In this scenario again, we're having an inducement high, whipping through Asia like nothing, right? Like in here, just messing around in here. Asia midline potentially plays in here. Again, we talked about this setup before. We will talk about it later as well, right? Into the inducement. Perfect. Cycle normally. Everything is normal, right? Until extreme getting mitigated. Even this scenario, even 10 times nicer, because you had your relevant breakout structure into mitigation. But then Asia just getting whipped, right? Again, if you check difference, this was the normal one. Again, inducement high, and then we have pullbacks, pullbacks, pullbacks. Everything is normal here, but then Asia whipsaw is just whoosh, smacking through Asia range after we had the inducement high, and then just takes out Asia range like nothing. That will lock in the Asia whipsaw, and then we still look same scenarios, extreme mitigation of the medium major inducement, depending on how we had it, right? Off here, that's your extreme. We now know this is an Asia whipsaw, so we expect this high to be taken out, right? So again, that would be a potential extreme mitigation, right? Again, this would be your extreme limit order. That's your extreme mitigation of the breakout structure in here. Mini build-up into inducement timing. Could be New York trap time in here, right? Also maybe is an EDM, and then obviously it's out of it, and we aim for at least to take out the Asia whipsaw high, or of course overall the next liquidity zone, and we want still to trade away from the extreme in here, which is the major medium inducement. For the overall days, we're looking for trading away from there as well. So that's obviously the Mona Lisa scenario. Let's see how we could trade it if we had the Asia whipsaw. All right, first of all, we had our Mona Lisa approach number 2 in here, right? Again, we start technically in the range, Asia midline, right? We have our build up. Again, technically, you could even see the mini cycle in here. Build up, vector candles to the downside with speed momentum, right? Then build up getting induced to the low side, Asia midline point of interest, mitigation, right? Perfect. Again, then you can trade the mitigation here, or in the M1, even after a breakout structure in here, right? And then into the mitigation. That's even nicer, right? So technically, could be something like when you have like a little push in here, that's your breakout structure in here, into mitigation, 10 times nicer, or this is your let and this is your EDM on a 1 minute. Usually not, because these pushes happen very fast, right? And they just want to induce out of it with speed, inducing Asia range into the extreme mitigation, completing the cycle to the downside now. Asia whips are locked in, and then obviously reversal, right? That's all possibilities you have to walk in your mind, right? Then guess what? Asia whipsaw, you can trade it off the approach number 1, extreme mitigation, and most of the times that's actually with its Asia whipsaws the only entry opportunity, the clean one, because they're just out of it, right? They usually don't give you a clean mitigation. They don't come back, give you a nice order flow or EDMs No, they're just very rapid movements, right? So that's again by entry approach number one. Sometimes it's a good solution. At the beginning, can be a little bit risky if you're not understanding when the cycle is done or not, right? But in this scenario, again, we had the build-up, technically getting induced with speed, right? Out of the Asia range. This scenario just into mitigation, something in the M5 in here. And again, that's what you have to understand when the cycle is done on the M5. If you see the vector candles, right, maybe gives us false pullback of some sort of smart money traps into mitigation to the left. In this scenario, we're just picking something in here, right? Again, if you had like down, 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 at some point you will see some sort of build up into inducement with imbalances left. If the cycle is here ready, right, and you are in London, open trap, having induced a build up after like a nice build up to lows, build up, inducement to low side, out of it with vector candles inducing the bigger picture channel into mitigation, definitely tradable as well, right? Doesn't need to be always these extreme mitigations all the time, right? Can be something in the range as well, or in a trend. You just have to identify these proper points of interest after your build up in here got induced, and you know that build up should be ready and the cycle should be ready to reverse on it, right? So that's the extreme approach, or the entry, the extreme limit order approach. Then in this scenario, it gave us the Mona Lisa scenario after a break of structure. And in this sense, it's not even aggressive because we had a break of structure in here, right? So inducement mitigation with a break of structure. So that's technically the confirmed one, right? And then after that, or you can have it in here. Yeah, there we go. Right. So that also can be a let entry, or of course, in this scenario, we talked about it. That's the push that led to the inducement, break of structure into mitigation, also being a let 10 out of 10 trade. Take that stuff into the extreme mitigation to the low side in here, then trade away from that. Again, perfect stuff. And this one, again, locks in as the Asia whipsaw. So we have to take the other way around now and see, okay, the extreme in here, we had an Asia whipsaw confirmed. We expect this high to be taken out anyways. And that tapped into our Mona Lisa point of interest of the higher time frames. So guess what? Same thing as we had above here. Approach number one, refine this zone, get the approach number one in here. Perfect. And this scenario, we also had approach number two in here. This one, again, this is, I see I switched those around. That should be technically this one, right? So this was the approach after the break of structure, confirmation with break of structure. And this down here would be without the break of structure. As you can see, this is the push that led to the extreme in here, right? And then obviously you don't have a break of structure after here. And here it's the different way around. So again, this is your approach number two with the break of structure in here. And that's the approach number two without the break of structure. Okay, perfect. Then last but not least, we had this Mona Lisa approach number three with a build up into the inducement, and this point overall order flow being an let or an EDM, right? Could be both possible scenarios in here, right? That's obviously the best case, more an EDM in this scenario with this point, right? But also can be an let or technically trading after the break of structure. So the whole thing is just super, super valid. Okay. Then we have our retail heaven scenarios, right? So if we had again triple bottoms taking out by the medium or major inducement, H1 looks like this, M5 looks like this inside, right? Then again, entry opportunity is getting a little bit more difficult, right? Again, we had same thing, our build up induced with speed in Asia this time, right? Could be something like here, right? Perfect. Build up induced to a low side, aggressive entry in here. Then out of Asia, right? Asia high getting retested, pullback, maybe let in here, expecting the retail heaven possible as well, right? Again, that's happens when again you're not having some sort of mitigation, smart money traps or anything in here. Maybe smart money traps because you're still in the overall build up, right? All possibilities. You will see it on the M5 of how it will look like. Okay, then this overall channel, equal lows, build up. The overall channel though getting induced to a low side, again leaving this double tops, triple tops, even forming a quadruple top. This technically is your break of structure because this is the push of the inducement getting broken, relevant break of structure into mitigation. If that's unlet again, 10 times nicer. Also can be magic manipulation minutes 2, for example, right? Perfect, and timing confirms it as well. And then you're trading away from it, another channel being built, another channel being induced, and that's where your EDM comes into place with here, and then you aim for more high side, everything away from this medium or major inducement high side. All possibilities. Again, this definitely can happen. Retail heaven, so be ready for it when you're having these build-ups induced to a low side to trade it longer. Again, we definitely doesn't need to trade reversal trades all the time. We can 100% trade continuation trades, and sometimes they even 10 times better because you don't picking all the extreme like, that's my reversal trade, oh, that's my reversal trade, oh, that's my reversal trade. No. That's again why we spend so much time getting the build-up into your head that you understand if the build-up getting induced to a low side, you still can have a continuation as well. And sometimes, again, that's all the definitely better opportunities. Again, smart money traders, they most of the time look for reversal trades. They look for their Kochs and break of structure and whatnot, their change of characters, right? And then they trade the reversal. But very few of them trade continuation because they don't know how, right? We know obviously how we trade continuation trades. So focus also on continuation trades. That will be a big changer for you because catching reversals can be very challenging, but catching continuation trades will work out very good if you identify the build-up, inducement into a mitigation. And here also this could be definitely a very valid trade in here if it's an EDM in here, right? Definitely possible because again, this is the inducement of the overall channel, but the safer one is after the break of structure into mitigation. If that's a let, then boom, take it, right? So guess what? How does it look like? Approach number 2 in here, right? After, I'm seeing again, technically again, we had the break of structure in here marked up. So we need to push like in here, then a break of structure into mitigation, maybe on a M1. In this scenario, there would be another break of structure. That would be the aggressive approach, right? So then you can trade it again after this break of structure, maybe into mitigation in here. That would be your approach number 2 after break of structure into mitigation and then out of it, right? Perfectly fine as well. Then we have approach number 3. If that is also unlet, then of course you can take it without the mitigation for sure. And in this sense, again, mitigation break of structure would be all the way up here. So if you have an let in here, definitely tradable because you induced this channel to a low side, right? Structural inducement here, maybe even here, right? And then extreme mitigation with a let out of it. Perfect. Then if you had another one, approach number 4, maybe this is an EDM in here, could be a let, could be both, right? Or like technically not both, but let or EDM, right? And then we had another one with this one, could be the approach number 2 with a normal, again, break of structure into mitigation if that's your inducement, or can also be your, let entry in here, right, away from this inducement of the build-up, channel build-up, equal lows build-up, inducement into mitigation, break of structure into mitigation. If that's also a let entry, take it. Expecting the retail heaven away from the medium inducement, definitely a possibility. Okay, also left equalize in here, 3, 4, take it. All right, and last but not least, we can look out for all these EDM continuation trades, right? Again, if you have equalized, getting induced, comes back, leaves the imbalances in here, EDM trade, boom, continuation. Why is it so nice continuation? Because you had a build up before, build up getting induced to a low side into mitigation, boom, continuation, EDM confirmation. Last but not least is the London knockout. Okay, so guess what? We're having our quadruple bottom in here as always. Boom, inducement low of the H1 being the medium or major inducement. And then we had our Mona Lisa scenario, Asia range, getting induced to a low side first. That's our Mona Lisa scenario into the H1 POI. Again, before that, we can trade into the inducement. If again, we had build up, structural inducement, not really a clean inducement, so we have to stay away from that. But guess what? Then we have like a build up to a low side, structural inducement high. Also, this channel got induced to the high side into mitigation of Asia midline. We never induced Asia low, so we trade into the inducement, maybe in Frankfurt, right? Again, one of my favorite trades there is this trade in here. If you have a structural inducement into point of interest of the inducement of the build up, right? High side to go lower into the inducement, into the point of interest of the H1. And then we expect obviously extreme mitigation, break of structure into mitigation, let EDM, not a build up, not a channel, induced to a low side, equal lows, induced to a low side, into mitigation, order flow. That's an EDM, boom, take it. And then we expect the London knockout out of Asia. Asia getting retested, Asia high getting retested. Again, why does it always get retested? Because breakout traders, they're having their entries, their stop orders above here, and they're getting obviously tagged in. The buy is here. At some point, they want to pull a break even. That's why, again, these always are liquidity zones, comes back, gets them at break even, and then obviously continues higher and shits in their face, kind of. Okay, so does it look like? First of all, we have this approach, can be an EDM, can be an let, can be nothing of both, right? But we just say for argument's sake, approach number 4, maybe EDM to this point, right? Structural inducement in between, or can be a let, or again, can just be a normal cycle play. We had the build up, inducement of high side into mitigation into Asia, midline point of interest, Frankfurt open, maybe to the minute, and then you trade low into the inducement. Right, that's perfectly fine. Then we had our extreme limit approach. Again, that would be the Mona Lisa entry in here. If this is your medium or major inducement, extreme mitigation, New York trap time, right? After, guess what? The build up getting induced to the low side, right? Or even you have some sort of other build ups in here, right? Then obviously you wait for the vector candles, timing confirmed into point of interest, boom, extreme limit order. Then the 10 out of 10 trade would be the approach with the confirmation of the break of structure into the extreme mitigation, right? That's your 10 out of 10 trade again, right? If this appears, if you have the extreme mitigation after the cycle into higher time frame point of interest after a break of structure. And again, if it's then also an let approach, oh my God, then it's a 15 out of 10 trade. You have to take those trades. That's Mona Lisa shit, okay? And then you're waiting for approach number 4, EDM confirmations. And again, if you had a build up before equal lows, or build up with the channel and inducing it low into mitigation, order flow into EDM, timing, maybe match manipulation 1 or 2, boom, just take it, okay? Take it, and then you're trading away from the medium, a major one, and expect a London knockout. Boom, perfect cycle. And then the last entry would be another EDM off of Asia high or stuff like that. And if you really master that shit, you will see the architects just in your face like, no, that is not fair. How does this guy know that? But that's how it works. That's literally the blueprints right there for you, handed on a silver plate, okay? So master that shit. It literally is exactly like that. That is the blueprint of the market. You just have to identify what cycle variation you have. Where are you in the cycle? Are you in the build-up? Is the build-up getting induced right now? What's the timing confirmations? What's going on to the left? Do I look for an SMT or look for mitigation? Or do I look for an inducement of that and then trading away from that? What cycle version do I expect? Is this now making sense to be a New York, London knockout, or do I expect a retail heaven huge difference there, right? Because again, if it's inducing high and then you're expecting a knockout to the low side, but it's retail halved instead, your analysis is completely off. That's why you have to understand the bigger picture and understand what's going on. That's again higher time frame, what should happen next logically, and then use the M5 to react to these mini cycles in between, and then trade these mini cycles, but having an overall higher time frame bias. So practice again. Now you're also having these entry approaches, so very slowly and surely everything in combination. So practice cycle variations, practice mini cycles, practice entry approaches in all combination. Again, nothing wrong with going back a step and going into the cycle variation master guide, how to identify those cycle variations overall better. Again, it's not a race. Get everything into your mind before you dig into the entry approaches. But if you're ready and you feel ready, there you go. Now you know exactly what entry approaches you expect out of the cycle variations and how to trade it. There you go. Make something out of it. And now practice, practice, practice.